We're your hosts. I'm Kate Porras. I'm a realtor at RE/MAX 4000.
And I'm Janice Burtis. I'm also a realtor at RE/MAX 4000. And let's kick off this segment, Kate, with some statistics, which I think are going to be a little crazy for the next 6 months as we look at them.
If you think about what we were doing this time last year,
hiding.
Well, everybody was just wondering what is going to happen. And so everything kind of came to a standstill for at least a little bit of time,
right?
Even in the real estate world.
Right.
Didn't last for very long. But this time last year was a little scary. Yeah.
It was. But, you know, when we compare where we are right now to where we were last year, our listings are still down 16%. So there are not very many listings on the market. So the other thing that we're down on is our days on market is also down almost 15%, a little over 15%.
You were right under, 79 days on market?
79 days on the market. And you got to remember, as Jim, our guest today, will tell us, our time to get a loan is between about 45 days.
Right.
So when you think about 79 days, things aren't on the market very long. The other statistic that is just crazy is our average sales price is up 18.6%.
It was what, 304,000 this time last year, somewhere around there.
It is, and it's 361. That's average
in a year.
In a year, yep.
You know, I did notice that we did have quite a few homes that actually sold, at least in March last year. So we still have that low inventory.
Right.
I don't know what your feeling is, and just in talking with other people, I almost feel like we are seeing a few more homes come on the market, which typically happens this time of year anyway.
I think we're seeing the homes come on the market, but the market is so fast that you really have to hold that home on the market active and collect contracts and then review them. That's the only way you can slow that market down just a little bit, which I think is an advantage to the seller. But it's
an advantage to the buyers too, because if you don't hold the offers, something comes on the market, you are getting instant offers.
That's right.
Buyers sometimes don't even have a time to see it before it's under contract. So what we're seeing sellers do is say, okay, we're going to list it on Monday. We're going to hold offers until Friday and make our decision Saturday.
That's right.
And so that gives the sellers time, as you said, to collect all the offers and then sit down and actually review them. It gives buyers time to get out there and take a look at the home and see if it is something that truly works for them instead of having to make that rush split-second decision. So it is a little bit of a benefit to both sides.
And today, our guest, which I'll allow you to introduce, will help us with what needs to be in place before those buyers and sellers review those offers.
Yeah, we have Jim Kaiser with Cherry Creek Mortgage in the studio with us today. Thanks so much for being here, Jim.
You're welcome. Thanks for inviting me.
Jim has some really good expertise when it comes to your credit, because that's going to be a major factor that people have when it comes to being able to even get a loan. So you have some background in what you've done before with helping people repair their credit. Kind of explain that a little bit.
Yes. So I've about 20 years of experience in the mortgage industry, and then 12 years in the credit industry as well. So it's definitely helped me as a lender, but it's very important for everyone in this business right now as far as credit.
Yeah. How important is your credit score right now?
You know, someone can come in and apply for a loan that has great income, great job security, linked assets, etc. But if they have no FICO score, they cannot qualify. So it actually has become one of the number one things you need in order to qualify. And most important, FICO scores probably have the greatest impact on your interest rate, your mortgage insurance, etc., and your ability to qualify.
You're listening to House Talk on KAFM Grand Junction. In the studio today, we have Jim Kaiser, the branch manager of Cherry Creek Mortgage.
So what is considered a good or acceptable credit score?
So today, I would say, a great score is to be somewhere in the 700s, but not everyone's going to be in the 700s. By the way, you do not need to be in the 800s. I know I'll have people say, I have to be in the 800s, but if you're over 740, you're going to get the best interest rate. You can qualify for the best mortgage insurance rates, etc. But even if you're around 640 and above, you can qualify. Because of COVID last year, it did force investors to kind of raise the guidelines on FICO scores. And in the past, you could be at 580, 600, etc. And there's probably some programs out there that will allow you to be that low of a score. But the majority of the time, I tell people now you probably need to be at least at 640 to qualify for most loan programs.
So what are the things that are going to negatively impact your credit score?
So FICO scores are based on, well, first of all, the number one thing that affects FICO scores, 50% of your FICO score is based on payment history and the length of the payment history. So if you have 3 or 4 credit cards and you pay them off, the biggest mistake you can do is close them. Because the minute you close those accounts, that payment history goes away. And being that it's impacting 50% of your score, you want to keep those credit cards open. And in most cases, you want to have a nice mix of credit. You want to have 2 installment loans, which could be like a student loan, a car loan, or a mortgage. And then you want to have at least 3 credit cards with balances less than 30% of the high credit.
Well, that leads me to a question for you, Jim. What is the maximum amount of debt a lender will allow you to have when you are looking to applying for a mortgage loan? Because we're talking about having these credit cards or these installment loans and things like that. But there is a point of good and bad. So could you help explain that a little bit?
Yeah, that's a great question. And most lenders, we're going to look at 2 ratios. We're going to look at your what we call your front ratio, which is your new mortgage payment divided by your gross income. And we want to see that to be no more than 30, 35, maybe high 30% range. But the back ratio is the most important one, which is adding all your other debt, your other credit cards, your student loans, etc. And in most cases, we don't want to see that exceed 50% of your total gross income. There are some programs that allow you to go up to 55%, but in most cases, I encourage people to stay around high 40s at the most.
So I think it's important that you said, yes, have a credit card account. That doesn't necessarily mean you're really using that credit card account.
Correct. And keep the balance low. So when I advise people to go out and open up credit cards, I always advise them that charge a small amount of money on them, pay them off, keep the balances low.
Or zero even.
Or zero, yes.
Okay.
Yep. But use them. That's also a very important thing, because if you don't use them, sometimes credit card companies will close your account. So I always encourage you to use your credit card at least once every 3 months.
So Jim, how often should I be checking my credit score? And I had always heard when I check my credit score, it changes my FICO score. Could you address that, please?
You bet. So the best place to go to look at your credit is to go to annualcreditreport.com. And you can get your free credit report from Experian, TransUnion, and Equifax. And I believe this month they're actually changing it. It was free that you could pull a report every week for free from all 3 bureaus during COVID. But I believe this month they're changing it back to where you can only pull a report once a year for free. You can always pull more, but they're going to charge you for it. I don't necessarily encourage you to buy your FICO score there at annualcreditreport.com. There's actually over 27 different scoring models out there. So it can get very confusing. Like when you open up your bank statement, it says what your credit score is.
Mm-hmm.
I call those feel-good scores because no one really uses them. So the only way you can get a mortgage score is to actually apply for a mortgage. But it's important to check your credit at least once every 3 to 4 months.
You're listening to House Talk on KAFM Grand Junction. In the studio today, we have Jim Kaiser, the branch manager for Cherry Creek Mortgage. So we talked about things that can negatively impact your credit score. Are there quick fixes? Let's say you find this house, your score's not quite where you want it. Are there some easy things that you can do to get it a little bit higher?
So the common thing is usually high balances on credit cards. And if you can get those below 30%, if you don't have the money available, sometimes you can actually go out and get an unsecured installment loan to pay those credit cards off or pay them down, and your overall debt will be lower and it will raise your FICO score. I had a couple not too long ago that they had saved up all this money to put 20% down on a home, but they had really low FICO scores because all their credit cards were maxed out. So I encouraged them to actually take half that down payment and pay them all down, and it raised their FICO score and actually got them into a better loan.
Jim, how long did it take them to do that? So they've got a low FICO score, they pay off their credit cards. How long does it take that FICO score to go back up?
So if you just wait for the bureaus to report, it usually is about 45 to 60 days around there. But most lenders, we all use rapid rescoring. So if you provide us bank statements, we can actually submit those to the bureaus and update the information within 3 to 5 business days.
Oh, wow.
Yeah.
Nice.
I've also run into situations where for example, I had a client, her husband passed away. He had been the one that took care of all the bills. So literally everything was in his name. She had nothing in her name, no credit. She literally did not have a FICO score. Like it just didn't exist. And so there are situations where people who have been really either situations like that or really responsible, they just don't use credit. Are there things that they can do? Do they need to have that FICO score? Do they need to go open a credit card account?
So there could be some investors out there that are doing loans without FICO scores, but I don't know of any, especially since COVID kicked in and all the changes in our industry right now. You really need to have a FICO score. So if you have no credit at all, it could take up to 6 months to establish a FICO score once you open up those credit cards.
Jim, what kind of things did you see? How did COVID positively and negatively impact your industry?
And initially, I think it really, there were additional overlays, which means a lot of the investors and lenders said, okay, yes, Fannie says we could do a loan for 620, but most investors said, no, we're only going to work with customers with a 640 or 660 FICO score. They may be more strict on ratios, so the tighter ratios, instead of qualifying at 49%, now you can only qualify at 43%. So they really tighten the reins on what you could qualify for. I am starting to see that loosen up, so that's good news, and hopefully that will continue.
The one thing that I'm also seeing in our market today as buyers make higher than list price offers on these houses, we have an appraisal gap where their offer is much higher than what the house actually appraises for. How are you advising your buyers when they're making offers, when they look at their cash, and just can you help our listeners on that?
Well, the first thing I do is I do advise them to talk to their realtor.
Great advice.
Because I do want to stay away from giving advice on how much they go above the purchase price, et cetera. But at the end of the day, the most important question is, what do you want your payment to be? And that's,
right,
to me, as a lender, is the most important. Yes, I could qualify you for a $2,500 payment, but if you want your payment to be $1,800, this is then what you could qualify for.
Right.
Yeah.
That's great advice.
Yeah, a lot of good information. We want to thank Jim Kaiser at Cherry Creek Mortgage for being our guest in the studio today. Jim, if our listeners have any more questions, how can they get a hold of you?
Best way would be is they could call me. My direct number is 970-256-0080.
This segment airs on the second Wednesday of each month. You can also listen to podcasts on demand at kafmradio.org. Make sure to join us next month for another edition of House Talk. Also, if you have a topic that you would like us to address, feel free to contact us. You can get more information by visiting our websites, Janice Burtis at janiceburtis.com.
And you can find me, Kate Porras, at kateporras.com. Thanks so much for joining us.
Have a great day.